All right. Record is good. Okay. All right. Okay, quick look here at all right. I'll run through some currencies real quick here on Thursday, or Friday, excuse me, the 9th of September. What I have here for news for today, data, not much going on. Most of it's overseas. Ours was just a Baker Hughes count. Labor in Canada. And the rest of these are, they've gone off here. India, that's interesting. All right. Okay, so going over the currencies. Okay, so what I have going on here is the daily US dollar. I wanted to see what's playing out. Okay, so basically we have a whole bunch of sideways. I'm treating this as a pause before trading higher. The other thing that's happening too is that the range is beginning to narrow. So it'll be easy. Basically set alarms at the high and the low here. Any weakness, whoops, this is a Canadian dollar, excuse me. Okay. Back to the Canadian dollar. Okay, so, right, all right. So basically same deal here. This is gonna move with oil. Last couple of days though, it's come back as oil's pressed up. We also have, in regards to taxes and that, as we progress into the season, stuff that's stored is going to get taxed. It's like inventory. Let's see here. So on the Canadian dollar again, if the Canadian dollar goes higher, so should oil. America is the #1 importer of oil from Canada. Would be this easy. USA imports. Total crude. Okay, all monthly, January. Nice. Thank you, U.S. government. You have your OPEC. Okay, so OPEC, we had a spike here, then coming down. U.S. Imports by country of origin. So this lists OPEC's. Okay, so total countries, 300,000, OPEC 99,000, non-OPEC 200,000. So 2/3 of it, okay, for June was non-OPEC related, and we moved down to Canada. Canada was 1/3, okay, and then the rest of it here makes up the difference. Okay, so Canada's a third on this one. So there's going to be just your basic commerce type thing. Okay, so the Canadian dollar, if it goes higher, oil should go higher too, the demand there. What we also have is harvest and things of that nature too. So there'll be a lot of money shifting around here too. I'm at the idea that the Canadian dollar is actually going to go down, okay, on this. But how this plays out, it's basically it's swiped. Okay, it swiped the lows here, up here. It tried to make a higher high, didn't do it. Tried to make a lower low, didn't do it. And so now we're here in second range. So we're going to get something. No matter what, you're going to get a whipsaw on here. I don't think it'll spring one way or the other. And the range is going to narrow. So that'll be able to watch. What's nice about that is if you snag something, okay, your stop isn't as far away. Okay, it's all about the risk. I mean, we've all had one that just got out of hand, and I've had them show up 3 days before the end of the quarter, and it's like, okay, whoops. And what happens there is you're piled into one thing. You may own a dozen things, but they all have the same common denominator, and that's what happens. And throw in some leverage. Because remember that you have everything that's going on here on the chart, but then you come down to psychology, and then who are basically the ones treading water, and then the business side, which is the mathematics. And even though what's on the chart here, okay, you could say that this is well balanced right here, dead center, 77, well balanced. Okay, yeah, people are willing to sell down here, and people are willing to buy down here, and we're coming to the center. We're coming to a happy place. All right, so the market is actually normalizing when it just goes sideways. Okay, so on this one here, basically just set the alarms. I'm looking today for a pullback in crude. Just due to the fact that I was watching UWTI, and that got up to a Fibonacci level, and I said that was it. I'm still leaning though that there's a possibility. Just basically take today or yesterday's high. We'll just say $78. Set an alarm on it. Because what eventually. That will normalize too. And like I said before, I'm pretty much, what was it, 37 to 47. I can live with that range just through inflation. And then the upper ranges, you could play the odds, say like 49, 51, and 53. That's just a mental thing. I put it in my head. You know, if I wake up one morning and crude's at 49, I go, well, the next target for me is 51, $2. And what's the other range? 47, which would be the yesterday's high, which should be some sort of support. Okay. New Zealand dollar, a lot of this, I believe, is due to the fact that they were chasing after yield. There is, they're Southern Hemisphere. So they have opposites of like crop growing and things of that nature. We still have to eat. It's still out there. It may not be a large segment of the economy, but there's the trickle down effect from all of it, seeds and fertilizer and everything in general. I mean, it's not like you're losing an account; you're losing a country. And as we saw, the non-OPEC, those little itty bitty countries added up to another, it's another half of the 2/3. Good going, Kev. 1/6 of the OPEC. Okay, bam, boom, pow. There we go. College education. Pow! What's half of a third? 1/6? I don't know. All right. Okay, so New Zealand dollar here. The angle of ascent is increasing. I like the short side of it. A couple of days in a row, played the short side of it. Did not carry through on the trade. Went like 100. We'll go over that too, which is fine because other people have other interests. I have 6 screens plus all the tabs, and I have to do my thing. Power. All right. Okay, New Zealand dollar. Here's our U.S. dollar, and take a look here. Oh, what? Yeah, no kidding. Oh, you buggers. So great. So I learned something new. Frozen screen. What do you mean? Sharing is paused. Bringing your shared window to the front. Well, that's, it does it automatically. God, I hope so. Whoops. The hell is it? Oh, for shit's sakes. Okay. Well, we definitely learned to learn how to turn that off. Where was I? This was it. This just bites the boner. There it is. What do you know? And it's highlighted. Share screen. Good enough. God, I hope it's still working. Okay, so U.S. dollar here. Basically bouncing off a sideways action here. I'm gonna looks like I'm gonna have to move these up to weeklies. Let's see here. Let me do this real quick. This will be something to learn. Menominee. Screensaver displays. No. Journal. That just bites. I don't know what I'm looking for. All right, we'll leave it at that. That I don't know what I'm doing. Okay, we're gonna go back to what I know I'm not doing. All right, U.S. dollar here. Okay, basically, its ranges beginning to narrow to 96 and 94 on the downside. Yesterday, I played a dollar on the long side. Basically, bought the dip. The United States fiscal year ends the 30th of September here. We also have the dollar comes down, money moves around for crops and all that other fun stuff. Accounts get reset, things of that nature. And then we're going into another quarter, that kind of deal. The last quarter of the fiscal year for a lot of people, calendar year. Okay, here's the Aussie dollar we saw. There was reversal yesterday. Played that one also on the short side of things. They did carry on through this morning. These haven't been updated yet until the market opens. So I want to look at a bigger picture here. British pound, this is the Brexit. I'm leaning towards the long side of things just due to the fact of past history and where it's at. Euro, if the dollar is going to go up, the euro's fat percentage of the basket should come down. So where are we at on the upper end? I'll say no more than 116. If we get another swing, for whatever reason, I guess we can go up a little higher. This is a quarter. How about we do this, Cav? Lines, right? Yeah, that'll work. And another line should go across through here, but we don't need them as thick. Or as red either, huh? An off color. Go on the white. Any better? Oh, well. There we go. That'll work. Oh, look, it's pastel. All right. Bambo, right? Come on. There you go. Okay. Okay, so the euro, and then I haven't figured out how to duplicate yet. We'll just chuck you in there. All right, just some sort of channel on that one here. You had the crossover here on, I have 34-day and an 89-day, just like a monthly and a quarterly deal. Okay, so it's crossed on the buy, which was, we'll call this isn't officially golden cross, but we'll just call it that way. Cross, okay, that marked the high. It came down, went below it, but also fell into the cloud, okay? And the signal still remained in. Just pointing this out for when you hear golden crosses and whatever. Like here was the sell, and it came rushing back through. Okay, so what I'm getting at here is here you're getting across the downside. So if there is, you're gonna get some sort of pressure on here. Right now, this morning I'm playing, I believe short pound or short euro pound. Yeah. Okay. Just to take advantage of the short euro and the long pound on any pound weakness here. America closes out the week, so I expect an interesting close. Plus, we also have rollover. It's going to make a lot of people's charts look all goofy. That's cost of carry, dividends, and things of that nature in there. And the future side of things that you lose out to. So that's why it's discounted. Okay, if you went and borrowed the money and invested it into the stock market and collected the dividends, that's the competition you have here. But in buying the futures, not collecting the dividend, you get the cap gains and leverage. In my eyes, that's the key. Yes, I understand compound interest, but socking it away, yeah, that's fine. But think about it this way, though. If I'm putting on a carry trade, which isn't paying diddly or negative kind of thing, we'll say, just a regular trade, that is going the wrong direction. Kind of like negative interest rates, right? Every day that goes by, it's worse for you. All right. But you're supposedly trying to get rid of the capital appreciation here and make your stock or your currency to get out there. Beggar thy neighbor, get to the bottom of the barrel. Okay, so here you have just a little channel to throw in here. Anything on the upside on the euro, I'd want to short it myself. I don't even, whatever, because of how close we are here, swing. You know, I just wanted to put down some lines on here, maybe 114, 114 and a half on the ups. On the downside, what I'm looking for is if this thing does roll over, I expect it, we're going to start hearing about 100, par, that kind of thing. So that's how I'm looking at the euro. Okay, and cool. There are lines on my chart. Okay, we'll go backwards here. I just threw this one on here. That was interesting. How did the... That's interesting. How come you didn't make a chart? Oh, FX. Oh, I'm using that currency. Okay. Swedish krona. These are actually volume bars, but we'll skip this. This is there anything worth on it? Well, I suppose here. You get $5 on $100 stock kind of thing. All right, but I'll pass. I'll pass on that one. Okay, so here we have the Swiss franc. Basically, let's take a little look, see. And draw lines across here. Order entry. What did they buy? All right. We need to thicken you up a little bit. Okay. Basically, playing it like that. All right. Same thing again. We had a whip, lower low or lower high, lower low, poked on through here in August, and then try it again. This reminds me of the stock market here. Try it again, not doing so hot. Came down to make a lower low. So we're narrowing out here too. So we're getting a lot of markets that are going to narrow, and what happens is it produces the volatility, a glut, low prices. Low prices. What's good for low prices is low prices. Everything in my eyes, it all resets. You don't need to meddle with it. It'll set itself. It's kind of like fads in that. Everything will reset until you do things like convince people that they don't need to rent, they can buy a home, that kind of deal. Then all of a sudden you get people piling in, which is fine. The bubble is just, it's innate of the whole thing. Okay, so the Swiss franc right now is same thing. It's just narrowing up. We're going to know here in a couple of weeks. There are a lot of Fed meetings this month. We just had ECB yesterday, and more to show up next week, I guess. Let's take a look at the next chart. Okay, Swiss franc. Okay, so here's our Japanese yen. Now, what I'm seeing here is it looks like a bear flag. So as this comes down, the US yen would go higher. Okay, so this is basically the collapse of the carry trade and what I believe was with ZERP in regards to, in regards to buying of debt. All right, that's going to be easy. Nothing good is free, baby. I'm counting on you. Oh, look, it does go this way. All right, so here, all right, I use all the lines. It's just an eyeball thing. Okay, so if this continues higher, we're going to have, I believe we're going to have some serious pain in different asset classes. The angle of ascent would increase. The low was 90 for the US dollar, Japanese yen, the low was 94. All right, if this one pokes on through, this would probably be a target, would be 90. So that'd be roughly 110. And then 110, 112 is how I'll play it right now. Just take a look at this. It's losing its Momo, and which is okay. I bet you if I overlaid U.S. debt, it would be the same thing, the same type of chart. But it was a nice move and a nice call cap. You know, ta-da! Except for I wanted it to be here by here. I guess no need. The old 91 degree chart. That's right, folks, 91 degrees. Okay, so that's my yen. I'm playing it to the downside. It's doing that this morning. This morning's action. Okay, S&P's down 6, so we're going to open them at the low. We have to roll people into stuff because they're rolling out of one and rolling into another. A lot of buying in general after Brexit, which was late June. So you had to roll into, so you got long in September, long. Sold all the options, whatever. Now it's time to get out of it, roll into D's and start putting stuff on. So I'm leaning at bare minimum. We should get an opportunity to run this equities into the fourth quarter, but we're seeing a lot of more shifts in the economy, retail stores, things of that nature. They're also heavy users of capital, and the cost of capital will be rising. Oh, that looks good down there too. 7-1. All right, so I'm good. Japanese yen, view all. Okay, Canadian dollar, US dollar, Australian dollar. That one's a nice chart. British pound. Basically, I could draw a trend line under there. Okay. All right, this one snuck on through, came back in, retest. You definitely want to be long if it comes sneaking through here. This is one of those, the world famous buy the dip deal. But basically, you have to think, here's this is the part of that I look at for the risk side of things. Okay, if it comes through here, it'll swing, all right? Okay, say you start buying the dip per se, okay. You're beginning to count 100, 200, 300 pips. If you come down to here, it's 400. So it's best just to follow like a weekly high and then kind of trail that down as it's coming in. Because the deal is even though the chart says, oh, it looks constructive, and if I go back a long period, let's change these up a little bit. Okay, here's the British pound. This one's going back. Okay, so that doesn't really work. I have to go back to quarterly, huh? Okay, so here we have quarterly, and I'll do it this way real quick. And then I want to do this. All right. Okay. What we got? Euro, possible change in direction. Okay, so the euro is going higher on that bar. Okay. One back. Okay. So, all right, here's a quarterly. I think I applied it to all of them. I'll do it again anyway. And view all. All right. So on here, here's the Canadian dollar. It was high here because of the commodity prices. This is the swing in, the pullback. This is when everyone was talking about how well Canadian banks are. This is the insanity that ensued with the buying of the Chinese money coming into Vancouver and that. Hey, if the price comes down on the Canadian dollar, $2 million for a shack, it doesn't look so bad. Okay, so here we are back. This is a pause area on the way up. This lower 72 to 76 area. This was a pause on the way down. We can see here was kind of a shuffle too that matches with the peak here and here. Here it's paused on the top of it, just went running back down. Here, now going back, high Canadian dollar because of the commodity prices of the 70s. This is when we finally took a hold of inflation in that in oil. Saudi Arabia flooded the market in oil. We got a natural bounce out of the deal. There was a drought in here, economic expansion, Gulf War, recession, rolled it on over, and all through this time period, the dollar was strong because the economy was just on a tear through the 90s, information technology related. Shift in the demographics, this is the tail end. This is your 50-year-olds, early baby boomers, that kind of thing. Now the move in the Canadian dollar here was secular in nature, the commodity cycle is now down, done. I eventually expect the Canadian dollar to come somewhere down in this area. Two different ways. You have a depression, or it's just natural. This year's harvest and stuff, we're seeing softness. Like oil stopped going down and oil kind of stopped going up. And so, you're beginning to find a natural, thing, kind of like this sideways here. And these are quarters, so this is multiple years. We're already at basically a year of this. So it kind of bores people to death. All right. New Zealand dollar, this I just think is a retest, and then we'll go lower. This is still a carry trade that the guys are chasing after, but like Australia, this is new territory. What was it, Britain? The interest rates haven't been this low in 400 years. Why 400 years? Because that's when the Bank of England was established. And that was as far back as the records go. So let's just turn this Great Recession into something worse than the Great Depression. All right, here's the US dollar. Dun, da, da, da. Okay, so we have here where we had to choke off inflation when we came off the gold standard, oil shocks, Iran, yada, yada, yada. Prices came down all through the 80s, and here's this 87 crash. Cleaned everything out, went sideways for another decade. Oh boy, when I talk about dead money, this is it. But if you want to trade one thing, okay, and this will keep your little trading finger going up and down, up and down, up and down. I mean, we're talking, if you like to make 40 cents or something in oil, I mean, oil is down 60 cents. So we're talking, 20, 30, 40, because eventually it'll get real quiet like this little bar here. All of a sudden you're like, I should just buy some calls, because eventually the whole swing of things, you'll begin to feel it. I feel the market like it's a living creature here. And then you'll get one of these. This is known as patience. You have to sit here and go, look, 95 to whatever, okay? Same period for me with oil. I think it's the same thing. We're flip this. This is going to be the bottom in oil down in 2020. So getting back to the dollar, we have a low that goes way back, like not seen in a long time, right? We get the bounce off of it. We get a test back to it, doesn't make it. I'm back, and then we get 3 bars running here. And this is in 14, boom, okay. So, you know, here was a trigger, here was a trigger. I don't use the wicks and stuff. It helps me with the meat because I'm in there. I'm in the belly of the beast. All right, that was basically a pause, you know, flagging out, and then moved higher. So here we are again. Okay, so I can say that we're back to this area here on the dollar, which was also here too. Okay. So this is one big pause. Now here's where it gets real exciting in a hurry. If I draw a line, well, let's do it. Because I believe this will save it and come back. All right, but I want to go red. Fat. Okay, so we have this going on. All right, then you have this under Clinton. So this will be your target. Here's like 103 to 107. You're gonna have to play this one in like 1,000-point chunks here, kind of like that XAU contract from under 40, and the target was 110. I think you got to like 105 or some crap, and that was the end of that one here. So on this here, you just basically just draw your freaking trend line on there. And this, you know, it's narrowing, it'll bust. Do I think it'll come down? Well, if that, you know, I have to assume that just bad things are going to happen here. Just one, due to timing. Two, the economy is going to do it anyway. All right. It's at the top. It's all set. All we have to do is just pull the trigger and get her to go. Where it's going to go, I'm not sure because of, I think it might end up somewhere in this area just due to the fact of, one, if we don't pinch all that wealth that the baby boomers have when they pass down, because at that time it's just indiscriminate spending. You know, when you're born, we can track you to building schools and things of that nature, but when you pass on, it's at any time, right? So if we have 10,000 people a day joining Social Security, you know, what happens, you know, when they leave grandma's house kind of thing, you know, and the kids start running around and start buying cars where they may have never had a new car in their life. Or there would be a percentage to look up. Where's my pad? People who have never had a new car. I'm not a big fan. Just due to the fact of the older ones are bigger. I guess, I don't know. You know, like let's say, can I have a 1987 Lincoln Town car? You know, hey, Kev, how about you lose 200 pounds and then you can get, yada. All right, enough of that one. Okay, so the dollar, I think it is indiscriminate selling and hyper, coming off the lowest, blah, blah, blah. But we're talking time here, right? I think 2024 kind of thing. Other people are talking about precious metals and stuff. I'm like, woo, that's fine and dandy, but we're going to be playing with higher interest rates. Just going off of history here. Okay. So that's the U.S. book. You all. All right. Canadian dollar, New Zealand dollar, bear flag, U.S. dollar, Australian dollar. Whee! Gonna head down to that away. I guess you could do it while I'm doing it, but I'm bored. And here's the British pound. Whoop, the one that started it all in the first place. Went all the way back to 80. That's it. This is when the British pound had to come off the exchange rate mechanism. This is the British getting into the commodity business. This is the British pound getting out of the commodity business. This would be the world famous stair step, elevator shaft. That's the unwind of leverage. You know, all that money that was created here, sure, I'll call it wealth. All this money that was created here, just poof, The swing, and then the final Brexit. Looks like a winner here, folks. So, you know, what are we at? 30, you know, up into this area, not a problem. After, what did I say? Okay, so this is the breaking of the pound, George Soros, and we're at 150. And what do I have here? 172 in that. So, that's what I'm looking at. I guess you could look at the chart pattern here. This is the old spinning top. This one even narrowed, you know, the come up. This is a little bit longer than I like for a flag. And then sideways action through the America raising their interest rates. Ta-da! We get a little, what, Harami cross. Hey, Harami cross. And this was quarterly again. So this is September. So whatever happens here, even if it goes up to the high for this month, which is 134.5. Okay, so that's that. And then the euro, to me, it looks like a bear flag, and we'll head lower. Wow, 90. Okay, people talking about, what's this one, 102? Well, they should start talking about it when it gets below 108. That's my target. We should be touching these up, Kev. So I go, why did I put it in at 108? And then bear flag. And then target. 2020, that would be about right. I'll do it that way. 87, you're a sadist. No, we can say 90. Well, but if I put 92.5, power, 92.5, 94, 93, whatever, 93, we'll just put it down there. I know what to do. I hear, when you post something, you know, to get credit and recognition, it's cited. That's what you have to do, is an oddball number so you can search your posts. That worked. Do this. Hey, what happens if I do this? Do that. That's not really right, Kev. That one is. Same thing again, down to there. 56, that'd be about right. That'd work. You're pressing your lock, do 58. Do it, Kev, do it. 58. And then does this sneak behind? No. Why do I have to X out? What am I doing wrong? A British pound. Well, that's not so bad, Kev. Point that arrow, that arrow, that arrow, that arrow. Holy shit, look at you. Oh, look at me, I'm right here. Yeah, don't worry, buddy, I got you. All right, and the tops. God, what a classic move this one was. Jesus, classic. Well, it's coming, people. All right, so how far do I go out to here? We'll see. I'll say I'll go up to here in 2020. 155. We'll say 155. British pound, 155. I got the tag head set key. Oops, I don't want to do that. Oh, you bugger. Yeah, I'm going to save changes. Oops. Sins of monkeys. I have that one. Japanese yen, I have that one. No, I don't. Ooh, the Japanese yen. All right, here we go. Okay, so this is under Clinton, under Obama. All right, so we have the move to here. So this would be similar bounce. Then we have, this would be a different color, which is basically about the same area. I'll take it. Be sneaky about it. Oops. All right. And what years are that? 3 years, 4 years. All right, so how far down do I go? Right about here. So 70 would be 130, so that'd be new highs. All right, we'll take that. I'm kind of lazy about it. Why be lazy, Kev? Let's try this. All right, that was fun. Fibonacci. You to extend. Extend you. Just put you down for there. That'll work. All right, we'll leave you as that. I'm just throwing something on there just for shits and giggles. I want to get the extension lower here. I wanted to see. All right, update. And that was the end of them, right? Oops. Canadian dollar still gonna trade lower. Verify. 20 lines, Kev. Swiss franc, I hit you before. Okay, so that's that. All right, so that's the currency stuff here. Bullish sectors. All right, want to look over this real quick. Change of months. Okay, that kind of deal. So what I have going on here, end of the quarter, blah, blah, blah. All right, so this is the bullish percent index. What this does is takes the stocks that are in the sector, in this case, telecom. There are a few of them. I don't know, many, whatever. All right, I'm looking at, they use point and figure charts. So if the stocks are in a bullish phase, it's a percentage. Here's 100% of the stocks are in a bull phase. This one's buried again. Telecom has been a hot thing for a while. But it wasn't. You can see going back to the beginning of the year, it wasn't. All right. There's probably going to be some merger activity in here. These guys aren't going to want to cut their prices. My phone bill is the only thing that hasn't gone down since deregulation. Oh, yes, more services and stuff. Go fly a kite. All right, so the phone, and then I'm just running through here. Here's the utilities. Utilities were basically buried too. A lot of chasing after this for the dividend yield. Everybody was looking for yield, but now they're going to be facing capital gain losses. I expect utilities to roll over hard. What do we have here? Industrial sector, moving up on this area. But I'd be looking, though, to get out of the industrial sector just due to if the dollar continues higher, it's going to cause problems with exports. The Dow Jones itself, bullish sector. Remember that what we're running into is a lot of the smaller stocks in that are rolling over in the background where all we have are just the major indexes that people index to when they keep putting money in. We're at full employment, retirement, blah, blah, blah. So they keep piling into the same stuff. The same thing here. At some point, this is going to come to an end. It's because the deal here is that this was a decent move. In 2011 was it. This was the Chinese deal here in 2015. This is the Brexit deal where it shifted hands, but here we are once again doing new highs. So this is basically telling me that fewer stocks are not in the bullish phase. So we're going higher on fewer deals. And every time I go through all these charts and I see just the dichotomy of things that are going down in the background versus, that's fine. You know, I just have to post something and someone will shout back and then I'll know I'm on something here. Staples sector, this is like your Coca-Colas and stuff, that nature. They go after that in times of uncertainty. They need to hide out. But these are all equities, the same principle, new highs, and we're stalling here. So we're getting some divergence here. Yes, the school of thought is that the ones that have rolled over, that rolled over a year or two ago, can jump back on board. That's fine. But like I said before, I'm not waiting around for that last 10% for now. Come the beginning of the year, or what? I'll take a look again. You know, if we're at 2,400, now I have to decide if we're going to double and go to 5,000, that kind of deal, which is part of the whole, you know, we're, in theory, we're on the upswing in real estate. And we just have to, you know, we have to convince people that this is what you want to do. All right, S&P 100, this used to be a popular thing in the 80s. You can see that it's beginning to pull through. So we're doing is taking what's out there, oh, this is at a new high. You can say something. You know, what are they doing in Europe? I think they're saying that they're at an X amount of, you know, monthly high kind of deal, but they have to scrounge around for it. Now they're at 2 days of losses. Okay. Let's see here. Technology sector, that was my run up when we got out of the commodity cycle. On here is you wanted to own, basically you're over, the easiest way of saying it is you're over the counter stocks, your NASDAQ type stuff, Russells, your stocks that are going to grow because the money is going to come out of the conglomerates. Because, you know, we were shifting from a structural of oil to now we're back into technology, but a lot of these things have moved, software companies, things of that nature. And technology. One thing of interest, though, is that I had a little premonition thing today. Is the technology guys that are all grouped up in that Silicon Valley type area. There are some that are moving to Texas, I think San Antonio or that, because the real estate's everything's expensive. It just keeps going up and up and up and up. In running a business, the only thing you can really cut is labor. Okay, so I'm liking the Silicon Valley to the Detroit, Cleveland, that Chicago type deal. So it's, I mean, you have your coders and you have, you know, but if for these people to meet up, at some point you're going to get less. I had an idea today of self-programming computers. I mean, we have Zapier, whatever. These guys have skipped the learning stuff for the humans. I mean, we're only talking a 3 or 4 step process of, you know, you do one thing and it does another thing automatically. Okay, instead of the human that thinks can actually get these little processes done a lot quicker once we get everybody on board. Still, my biggest shocker of all this technology thing is I think more than half of surfing now is done on a phone. And all Apple is doing is they're making a bigger, they're trying to hit the center of the target. I mean, what did I see? A 13-inch iPad, you know, so you know, we'll find a happy medium to something you want to carry around. But I did see one that was done on glass. We did that for a while. And there's a big difference between my, whatever, 3rd generation and 4th generation, or 2nd and 3rd in weight. Well, we're still back to, will it last 10 hours? Okay, technology sector. If you're long those, I would recommend writing some calls against it. Like on a strong day, yesterday's action was interesting. Then we had the rollover, which is going to screw up the thinking for people. And that contract will expire next week. The futures and the people will have to get into something, right? If it looks like it's rolling over, okay. Which I mean, here 2161. They look at their chart. They're not using the December chart. They're using a mixture of both. It looks like it's rolling over. You turn it around for whatever reason. An afternoon thing, like an afternoon merger would be nice, kind of. In the day, we just get some sort of run up at the last 90 minutes or something. The kids will chase after it, whatever, and they'll hold. All right, But then what happens is say they get a loss or whatever, now they're beginning to hold it in this contract. So what I'm implying is that they're rolling out of one contract and rolling into another. And in June into September, as that time period ended, we ended up with the September contract. We had the Brexit part right away, and now at the end of it, it basically is stalled at the upper end. So do we open it at the high here? You know, we kind of swiped the stops on the S&P. I guess I could go take a quick look at that, right? Right, the Kev? What do we have here? Oh, 3 timers. Open up one more. Oh, yeah? Yes, December. Oh, cute, Kev. That's a gorgeous chart. All right. Probably have to go to candlesticks. Okay, so here was the roll. This is December contract, okay? So here you have the February one, and the March contract's going to go off of here, off there. So you have the people in December. Basically, when you're coming to the end of this one, you're coming to the end of it. It was at the high. They had to roll into March, and it just basically collapsed on them. March came around, basically a round trip. Okay, so then they move into June, and they go through this time period again. All right, so this is at the upper end. They roll into December, September's on here. Okay, in the June period, they get a swoon here. They get a spike, another swoon, and this move here is the one where I said I've had enough. It was one last slingshot, but all the charts I was looking at from behind have just been rolling over. I'll just, you know, I could say transports or whatever. A lot of stuff underneath is rolling over. You can look at summation indexes. You can look at a lot of stuff. The deal is you can pick your index and say whatever you want to, but all I know, all I know is I don't like what I see, and I don't have to come up with an excuse. I don't have to just come back to anything. So, all right. So here we are, June. To get out of that, they have to roll into September. They get whacked, and then basically all through September, it's basically stalled, just stalled. Right. So here you have a deal where people are too scared to buy and they're too afraid to sell. Okay. In my eyes, it looks like a happy place. But every time I did this yesterday morning here, what do I want? We'll go to 3 months from now, and I'll put up candlesticks, right? Candlesticks. Okay, because what I was looking at, all right. All right, so here you have this going on, and this is a daily. So here you have your little wick on top. It tried to make a new high, failed. Tried to make a new high, failed. We had a Rami cross here. Indecision. Yesterday, we tried to make a new high again. We actually set it at, I think, 2 or 3 in the morning, right? And then it rolled over. Now, you need the volatility during this time period to get out of stuff. You know, because what happens is you could buy the bigger futures and then peel off chunks of it with the minis. And that's, if you can get in at, 40 and sell it for half on, that's what you're doing. And you end up being hedged. I think the margin's like $50 or something, whatever. And that's what you do. I myself just prefer to do the whole option thing on just writing calls or writing puts depending upon my strategy. But so we went and tried another time. We took out, if people have their little buy stops here if they're short, okay, because we closed down in here, all right. So now we're trading lower once again. What was it? I say 70, 61. Okay, so here we are at this line. What this solid line is the pivot for the rest of September. Okay, and so the pivot comes in at, what's it say? 67. So technically, right now, right? Oh no, this is the new pivots for next year or next month. Okay. And now here's another little issue you're going to run into. The pivots are using the previous prices. There you go, Kev. Peter Piper picked a peck, whatever. All right, so when you have the sideways, things begin to narrow on here, okay? So how I'm looking at this, and with this in general, with candlesticks, you need a 3-day pattern is basically how you look. Trying to get the top tick, that's fine. You know, you had to be up at 3 o'clock in the morning with Kev and you snagged it. Okay, so you get the top tick here, it rolls over. All right, so now you're looking for follow through, okay? It took out this candle, it took out this candle, and we're more than halfway through this candle here, okay? So now we're on, this will be day 2 of the dip thing didn't work, okay? Because inside of each one of these days here is some sort of dip, okay? And the monkeys have been trained on this thing. Most people think that this thing is going up. We basically, from whatever, Brexit, 2150, and we're at 21.8. I mean, it's 30 points, okay? 30 points was a range of what you had on an average day, okay? So you're going to have both the humans and the computers narrowing this stuff up. Today we have options, right? Yeah, Friday, yeah. Okay, so set an alarm at the highs. You can do it with the highs here if you want. Each one's off by just a skosh. Okay, I guess personally I just do it Wednesday's cross. Wednesday's high, I'd do that, which is basically the top of this candle if there's a reversal. But we're already down to here. Okay, you can see how when you exclude the little tails or the legs on here, okay, this is it. So this is your trend line. The kids will end up drawing their trend lines, you know, they tell them to find 2 points. Okay, I kind of like the meaty part of it here. All right, so here would be my alarm on it. Now we're close enough to this low here that you'd kind of want to, you know, swipe it because you're that close. Now think about this one. Here's Thursday, here's Wednesday, here's Tuesday, and Monday was a holiday, so this is Friday. So if you go back to a weekly on here, you're working on yourself, sons of monkeys. Oh yeah, there you go, Kev. Good boy. Okay. All right, so this is on a weekly here. You're going to begin to take out the low on this week kind of thing. All right, where's that there? 50, 60, okay. I would draw, oh, why does that look so ugly? What do I need? I need to get rid of all this shit. There we go. Give it a few more bars. And how about we just do, what is that, 3 months again, right? Okay. All right, so, okay, so here on the low, where are we at? 2166 on the futures. We're below it, okay? So we're trading below the weekly low. Here's last week's, okay? And then I would draw a trend line across here on the bodies. Some people will have this. This gets you in early at 2160. You have to decide if you want to hang into this thing, you know, if they're just going to swipe this and then take it higher. Basically, I'm treating this as that we're going to get some sort of failure that will continue on, just due to the fact of everything I've seen before. My bias was, you know, at least cautious, you know. Everything's narrowing too. It's like, Kevin, you're just talking great volumes. We're only talking 10 points, right? But the deal is that's how it starts. You know, every day, buy the dip, buy the dip, these are weeklies too. Buy the dip, buy the dip. I mean, there's a Pavlov dog here. They get a little taste of this here where it's an outside. They get the top and the bottom and it takes out the previous week. This is the first part where they get choked. All right, they get whipsawed here and here. Their money is gone, okay? 1 week, their money is gone. They had it both sides. We had an inside, no, I guess we dipped down a little bit, but we'll call it an inside area undecision. The little wick thing again, they tried to push it, didn't do it. If we close below 2160, you know, it'll be like, what is that, an inverted dragonfly or whatever. That would be the last strand I'd give to the bulls. Okay, but anything under 2060, I have to go home with at least some sort of options. Yesterday, I was able to score some puts that are further out in September, because we have our meeting in September, and there are other FOMs, there are other meetings too. The deal is because everything is narrowed, any excuse on the planet, they'll want to know why it went down. And here you have the other, this would be a classic move this morning. Where's my thing here? Where are we at? We're into the next hour. We're at 5. Okay, so we're going to get bonds to open up in 20 minutes. We don't have shit for data. Whoops. Yeah, you have to be over 18 to listen to this, right? Okay. All right, anything under 2060 today. Draw your line, Kev. Be a good boy about it. You know, what happens if they can't hear? All right, that's the last, where am I at? There's not going to be anything for volume. All right, so this is it. So 2060. Anything under this, it's coming on down. All right. So what I'll have to do, because things are so narrow here, I used to play these in 20-point chunks. It'd be 2040 would be the next one. I guess that would be about right. You can draw a straight line. Okay, we'll just say that that's about right. There's a little tail there here. This would be the next target. So anything under that, it'll probably come through over the weekend then. Okay, so this would be a target. So if you're short, even today would be a classic move of trying to get to, like, what is the low? 61. Okay, try to take the low. All right, run Europe into the high, and then bring it back down after the close. That's what I would like to see. And then the other one is just for some reason to pull it back up is the late day rally of some sort. Whatever, buyout, whatever, something. There's been a couple of news incidences. But the thing is that most people that are on top of it, they're just piled, they pile into here. You know, like in my case, I can hold on to my short position. That's the other thing too, is you can take delivery too. All right, so that's how I'm looking at this for today. We also have the roll. That would be, and the nice move would be, let's see here, it would be like take out the low. Yeah, so this would be the low. Go back up, and what would be the range? No more than 72. What are they? 68 to 72. We'll see that 68 to 72, right? 68 to 72. Yeah, about that area. Okay. Try it this way. Okay, and then come back through. Okay, so how many points is that? That's 20. We need to close under 60. Okay. All right. So this is PDS. Okay. 62. That's what we're at right now, we'll say. 62. Go over 58. God, that's too close. I'll do 56, 58. Let's take a look here at one of my charts. This eyeball. 2-hour chart. 55, huh? 60. And a 5-day tick chart. We're on it now. So what about a daily? What do you have? What do you have? 50. Jesus. All right, so I have to plane it by tens. A little different chart. Yeah, that one. Okay. What is that, 60? All right, I haven't looked at the pivots for this morning, but these are just my gut and how to play this thing. This would be 68, 72. I'll adjust it. And then this one, we'll just say 50 for today. All right. So this is on the downside. 50 for close, because we have options. 50, 55. Come on, Kev. 55. All right. On the upside, line. On the upside, 75. some sort of low again. We're back to the low again. They need to swipe under 60. All right, so you put 60 there. I wonder if we'll go this way and actually go under the lines, or if we just come back and do a partial one and then take off. And then on here, what do we have? So 80 is 20 higher, so that's a hell of a push. All right, let's say 70, 80. Yesterday I was talking to somebody about either, what did I say? It'd either be 60 or double zeros. So that's 20 points. And we're down 8 or 10. We're down a good chunk. So would that be 80? What is that? 80? 80 to 84. I'll have to look at the point of control. All right, so that's how I'd look there. So let's see. That would be 55, 50, 54. Upload. Go away. Upload. All right, so back to the screener. Nope. This one. All right, so technology sector. All right. Right calls against it. And right now, it has some sort of intermediate type top going on here. The Canadian, this one should have a rollover here too. Here's 2014. Here's 2015. This was a decent bottom, and then the beginning part of for commodities that worked out just swell. But we're at the high again, so I'm going to be bearish on gold and basically miners and minerals. I should actually take a look and see what Canada's the #1 trading partner. Oil we see, so it's going to be that related. S&P 500, here you are. It's poking itself out to new highs. Can't seem to get the handle on it. It actually looks like at 2013, the most amount of stocks were in the bullish phase. Making lows here, it's kind of doing the grunt thing, but it just looks like it wants to roll over. You know, it comes down to mathematics on all of this. You're past the tipping point in my eyes. And here's the material sector. Now, this one was interesting. We had the double top here. You have your BASF or what, Monsanto. They're all coming in. What they're trying to do is merge, pad their accounting stuff, get rid of bodies, and then work for the next cycle here. It'll be difficult for a while. But also this has housing in there. There should be an initial shock. We're seeing it with lumber and things of that nature too, with just a pause in the housing sector. Okay, now we're going to start coming up to the ones that are bottoming. Okay, here's the energy. 2011 was just a general stock market pullback. Also, which was interesting, is that was the peak of the oil, right? So it had its deal. That was, I'm sure, part of the shock. Yes, 14 and 15. You can see this is the Chinese devalue their currency, and we get the shock there. This is the beginning shock. This basically, to my, it's a counter-cyclical move in a secular bear market for oil. This was the amount of oomph that it had with the oil coming off the bottom. But as you can see, it's basically stalling here, and you're going to have a lot of little stocks disappear. So eventually things will pick up here again, but to my eyes, oil is dead money. All right, here we have the financial sector. Okay, are they telling us that things are going to work out well for them? Well, obviously they have to buy debt to put on their books. I'm speaking of like insurance companies and things of that nature. They need to have some sort of flow in there. They could buy life insurance contracts. You have your school endowments, on and on. They need some sort of trickle to have come in here. All right, interest-bearing type stuff. All right, so in the big, they washed out. Okay, they didn't fall as hard, financials, as it happened in January and February on here. We had the bounce, not as much of a pullback here. Also remember that there was the first interest rate hike here. So this was just a taste of, we finally caught them playing chicken. What is this? What's an alarm? 6:11 in the morning. What do I got going on? All right, so we have the pullback here. We're poking our head up through here. Now this is, so basically in my eyes, we're seeing a shift now into the kind of like an overdrive mode. Okay, you can just draw a trend line over here on your banks, and that. So maybe they're anticipating higher rates in the future. Now remember, the rates higher are in the front end. The back end stuff that I showed is already moving in Germany and Japan and all that stuff. So the market's doing one thing, and people who don't look at the charts are saying another. But I think any pullback in financials, banks, I don't care if it's Deutsche Bank or Credit Suisse or whatever, you just look at the chart. You know, we're running out of bloodshed. We ran through Spain. Spain goes up 50% like 2 years later. Greece, same deal. Whatever. Or Italy didn't really pan out. Now we're working on Brexit, which is big. They can just jawbone the thing and just watch the currency now go higher. They basically, it worked for them. They got the currency to do. Everything remains the same. Except for the people's assets that are priced in pounds. But their homes are now cheaper to foreigners, right? Okay, even hey, you know, I raised my price and some foreigner bought my home. You know, there's Kevin with his Cockney accent. All right. So any weakness in financial sectors, that type of deal. I did put a short out on FAST. It's a trading thing. I really don't like equities. I'm going to stick more with ETNs and ETFs. It's going to be a little more difficult on the commodity side, but we'll see it. We'll see it. Just like we had a shift of commodities from low to high over, what was that, November to, well, yeah, we'll say September. So far, we could have oil at 50 something, whatever. All right. So 9 months or, you know, working on a year. Same thing here with your you know, ETNs and ETFs, where they may get pooed upon. We'll say we'll use volatility. All right, that's fine. It's a bias directional type deal. Okay, so you buy the one that actually works. You know, you don't buy something that goes in reverse when you're, you know, it's kind of like, oh, I'm going to buy the uphill thing when you're going downhill. Okay, and decay, whatever they want to, you contango backward. What it's the same thing on the chart, up or down. Yes, there's the stuff underlying it, but you have to get the trend right. You know, some people think gold is going up, and I think gold's going down. You know, it's my 4-year downtrend versus your 6-month uptrend. You know, oh, but Kev, whatever. I don't, you know, I'm not in Vegas. I don't need to put 4 teams together in a parlay. But here's the NASDAQ 100. Okay, so here in this case, once again, we're back to just 100 stocks. Basically peaked back here in 13-14. One more time, here we are again, try to make, you know, all-time highs, blah, 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 on fewer stock. Okay, so you're doing more with less. That's just, it doesn't fly with the Kevin here. Okay. Let me see if I can do it this way. Execute, take profit. What am I taking profits on? It's a little too busy. What time is it? Bonds open up? 5 minutes. Okay. All right. So now I have the NASDAQ deal, and Kevin, be a good boy. Overlays. Price on this one? Where's price? Same scale? Does that work? Yeah. NDX. Good boy, Kev. It's an overlay. So you'll do it, right? Yeah. Okay. That didn't work out with the shit. All right. But basically the same deal here. What am I looking for? Everything's automatic, right? Yeah. Oh, how about this? That'll work, right? White buckets. Okay, so the price, what the hell's going on? MACD? Oh, hold it. Why do I have an MACD? Get away. How can I actually? No. Oh, that ain't working with the shit either. Ah, all right. Oh, same scale. Ah, bad Kevin. Rock and roll in the markets. All right, so here we go. So what I have now is a daily on the NASDAQ, okay, and this is your bulls on here, and this is the price. So here we have where there's somewhat of a divergence here. Okay, you can see where it's going down, and prices, they tried to oomph it, it didn't work out, and then it just cratered. They went running up again. This was actually a strong move with the underlying theme of the stocks. I told you that they were oversold. I mean, here you have only 22%. You have 80% of the stocks in a bear phase, or whatever, a down phase versus an up phase. Down about 20. You can see the overshoot here on the price. Okay, so the spread between the price and the underlying makeup of that sector, it changed. Okay, so now you have, it went screaming the other way. All right, so here we had screaming and right off the first quarter lows. All right, price didn't come with. The kids didn't believe it, right? All right, so we get a decent high. We get a pullback, decent high again. We get a swing here now with the Brexit deal, right? Pokes on through with the price. They end up dumping it here. All right. The machines kick in one more. All right. Didn't make a previous high. Okay. So this is at 80% of the stocks in the NASDAQ 100 are bullish. Here was 84. Here it was a stronger market and the kids didn't believe it. Here it's a weaker market and the kids just can't get enough of it. So what I'm leaning here is when this thing rolls over, this is going to have to overshoot like it did down here. All right, but then when you get back into the bigger picture of stuff, I like this. See if it works on the weekly. It somewhat works on the weekly here with it getting chopped up. Here's the price. Here's the cyclically of, now remember, it's just how many of the stocks out of the NASDAQ 100, 86% of them are pointed upward. And you can kind of see, I can do a correlation between the two of them, but not at this time. Here and here's the pullback, another pullback. Here the pullback wasn't as deep, but it was price-wise. So there was underlying strength, but they were willing to give them away cheaper. Come storming back, they didn't believe it. The price here, even though it was higher, you have a stronger market, and they didn't trust it. You get your pullback. Okay, shoots up again to new highs. The NASDAQ goes to new highs on weak. So there's underlying weakness here. So in my eyes, here you have a new price. They haven't even got into the selling yet. Okay. I'm going to assume that they're going to come storming through in this general vicinity to buy. But usually when you go through the upper end and you pause, or usually you come back and test this. Somewhere around when we get less than 50%, somewhere in this area, then I'll have to revisit to see where price is. But here you can have one where this has to wash out below here. It doesn't have to go down to 15. What was this? 18, 20? Okay, so somewhere around 21, 22, 20. Then that's where I'd be looking for some sort of low. But by then, the NASDAQ could actually be all the way down to the highs of, or the lows go back to 2014 again on the NASDAQ. Because it doesn't include the price. It just, is it in a bullish or bearish phase? Of course, I have to go thumb my finger through 100 of these, but it's quick, just 10 pages. I'm going to keep that. Let's see here. So I have that. All right, that's the NASDAQ. I want to save that. That's one of today's things. Okay. Save. All right, then I wanted to run through, whoops, not the. All right, everything treasury. Come on, you. Treasury all, okay. All right, so now we're talking about the FOMC coming up here, I think at the end of the month. All right. So what I want to do is look over a few things here. All right, so this is the 1 month T-bill, okay? Basically, here's interest rates. This is what we needed to do to jam the economy at the real estate. This is when we first started tightening. When they tighten, it takes about 36 months. So it's 3 years after the December peak, okay, is when it finally gets to the economy. Now we did December of 18, okay, so we're pushing the envelope. So in theory, you could say that interest rates, or in this case, T-bills, are at an 8 or 9 year high. I don't have to convince any, you know, that's the thing. All right, so we're coming off of we're coming off the lows. All right. You could see how it worked. This was the last real estate cycle here. Okay, this was the peak of it. This is what they needed to do to drive the economy into the hole, the bastards. All right, so it would have done it on its own. $500,000 for a duplex when everybody in town makes 20 grand. All right. And she's 19 and makes $218 an hour at IHOP. And 106% mortgage. Oh my God. All right, so we're coming off of the lowest here. It takes 36 months. All right, so that's about 3 years. So it'd be December of 18 going into 19. So somewhere around, you know, I'm looking for a drought or a hard winter or something, somewhere around 2018, 2019, the effects should come through the system, plus also the economic side of raising interest rates for 36 months. Okay, and then that would probably be the bottom in oil going into the next recession, somewhere around 2020. What I'm looking for in equities is some sort of seriously good shock. Now we're speaking of interest rates. All right, going back to our little history lesson back in 37. We're coming off the Great Depression. We raised interest rates a quarter from basically, I think 1%. We went from 1 to 1.25. All right. We actually had to drop it again, and stocks fell 50%, 55% in 4 months. Okay. That would be similar to the 1987 crash, where it started in August and didn't bottom out until October. Okay. And that one fell 45%. Okay, so the same type of deal. So that's what I'm looking for. It didn't cost the economy to, what it was just enough to shift that psychology, and then the other people, those in the know, we'll say the bankers, you just start handing out the money. You know, like in 2005, the real estate cycle here was the baby boomers buying a second home and talking about retiring. Yeah. Okay, so now here we are. We have the economy is 25. The economy is a lot of housing, a lot of employment, the doorknobs, the toilets, you name it, all of it. Long line of people for a home. What did they say? Was it 20 acres? That's including all this. It costs 20 acres per house in America of land, even though you might be in a quarter or third or whatever. That's the number of trees and all this other crap they have to put in the ground and mine and whatever to build your home. All right, so what we need to do, also cars are 25% of the economy. All right, so we're on a cycle of replacing cars. We're some headwind though with the boomers are gonna move down to one car if they're still married. All right, that's just how it is. Okay, so we need to get money into the system. We also need to convince the millennials that it's okay to go and take out some cash. and just keep pump it into the economy. So when we raise interest rates and we shock the stock market, we should have an upswing for 7 years or so, 6, 7 years of housing. For whatever reason, the people that bought the micro homes don't like it. They want to be whatever. It doesn't make any difference. You know, they come up with some sort of cool idea. You know, like what is that thing called? The warthog? That's a Gatling gun surrounded by an airplane. You just start with the house. What do you want in the house? I want 20 feet of Marshall stacks and a theater TV. Then they just work it backwards. I mean, when they ask you what the size of your bedroom, I say I'm scanning in it. How about a hammock, mofo? All right. So, but what happens is it's the psychology part of it too, is that interest rates are moving higher, right? So you people who are going to scramble to lock in stuff. We've done a lot of off the textbook type stuff for right now, but we need to get the money into the market. How about an easy one? Here's a freaking credit card. You've been pre-approved, you know. You deserve a break today. Go spend, you know. So whatever it takes to get the money into the system. I also believe, like I said, with the baby boomers, you know, moving on, that money is going to be passed off, and it's just going to be indiscriminately splashed all over the economy. The downside is of course, is we've pretty much choked off anybody that has a 6-figure college debt. We're talking nonprofits here, right? Kevin! All right. Oh, is that a hot mic? Okay. So we're coming off the interest rate thing here. Now, what'll happen is it'll feed on itself. We have inflation. Why do we have inflation? We have too much money chasing I don't believe that story at all. You're still going to buy the same thing. You're just paying up for it. You know, too much money, too few goods. No. They just raise up whatever someone will pay for it. All right. Good boy. So and here you have other ones too. If a home goes up 7% and your mortgage is at 3%, you're making and you have inflation at 1.5%, 2%. You're still making money on you say buy a home. It's an investment. No, it's a liability, but it's an investment. You know, if inflation and carry costs, and we'll just say it's new, right? Nothing should break down for 30 years. All right. You're making money over time, right? So you just put them into a home. Hey, come on in. Here's a home. It's an asset. We'll put it on the books as that, and this is all you have to pay. I mean, if we were managed to fund the Treasury or the Fed with trillions of dollars at damn near nothing, and globally now, we're in a different place here. You know, we need one more flush of the system here. Okay, so this is just a weekly on it again, 1 month there. You can see how it took off in December when we got the first rate hike. It's pressing this way to swing again. It'll continue on until the economy stalls. It's a time thing. Like I said, the only shocker would be is if we had to drop it. I don't know why we would drop hurricanes or earthquakes. I don't know but that can cause issues too. We'll blame Mother Nature on this one. Okay, that's the daily 3 months. We can skip that. 6 months, same thing. What am I looking for? Okay, TED spread. Let's just go back. Okay, TED spread is deposits and the difference between money in America and money overseas. As this rises, money's more in demand, and they include it as a kind of a fear thing. All right, this was I think Spain in 2011 or 12. Well, actually, we had October was a bottom, 1066 on the S&P. All right, so we had to swing this way. They're not paying attention, but this may be the fool me once, shame on you. Fool me twice, you know. Okay, but that's basically how I look at it as somewhat of a fear gauge. People are desperate for money. I've heard ideas of that it's because there isn't a demand. The T-bills, there's a shortage of this stuff. T-bills are actually purchased at a discount. So you pay $9,900, and in a month you get 1,000, okay, or 10,000. Excuse me. right, so they're bought at a discount, so you get your 10,000 back. That's how they work. So if you had a demand, right, the rates would go the other way, and we're seeing that they're rising, and that's the TED spread here too. Okay, so let's see here. All right, so we're just going to count this off. So we have last year. Okay, so this was China coming unglued. Okay, then you had this is the bottom in commodities, and that we took off again sharply. All right, stocks had cratered. Okay. I wonder if people are on margin something fierce, and they bought in. Well, I don't know. Okay, and we're moving up to here. We may be rolling over here that they've alleviated the money shortage problem, but we shall see. What am I looking for? 10-year. Okay, 1 year. Where are we at? Okay, here's a 10-year. Okay, and this is monthly. All right, you talk about Japan and their QE and everything. They can't solve a freaking thing or whatever. Our bottom here, June and whatever, is Brexit. Basically, Brexit bottomed. They cratered our rates for us globally. So this is a bottom in Japan. We're getting a bounce. That's fine. But how I look at it, if you bust this thing down to a weekly or daily, you can see that it made a bottom and we're bounced off of it. What the TV and the feeling that people talk about with interest rates, it's not there. And when you get up to like Germany down, all right, there's worked out. What is this one? This is a weekly. Okay, same chart. From that one, we go to a weekly. Comes in, rates go negative, right? Okay, so rates go negative. Here's the zero line. So they're not spending too much time down here on the negative side of things. Not too many people are talking about that, right? And daily. So the same thing, come down and spring up, and now we're trading above this. So I can see this going higher here. Where are we at for holidays? We just had one, right? Same thing for Germany. So this is a daily. Bottomed on the Brexit deal, popped back up, now trading sideways. All right, so it's lost its momentum. 2 years, they can skip all this stuff. This is the front end stuff. If rates are going to go higher, it's going to be in the front end of stuff. 2s and 5s, all of them coming off here, moving on up. And here's Britain, same principle. This was the Brexit. Okay, we have Brexit and the aftermath, and now we're swinging higher again here too. So I have a weekly in that 7-year, basically the same thing. All right, you can see that one. That one's going to swing right there. So this is a US 10-year. You can just see it. This is the interest rate. So you have this. To me, we're bottomed. This is a classic seasonal pattern too on interest rates, and now we're moving higher. You have the demand for homes and things of that nature, and 20-year and 30-year. Now remember that we're raising rates on the front end, but it'll eventually pass off to the back end. You know, if we know that the real estate cycle is 18 years, if you get a 30-year loan, you're going to lose your chance of losing your house a couple of times. Now I want to switch over to, these are 3 times. Yeah. Edit list. Okay. Remove the numbers. Yes, remove the numbers. All right. Summary. All right. Change. UGAS, UWTI, intraday. 1 week. What does that look like? 1 month. Dust. Dust is actually a 1 month winner. Oh, I wonder if they're taking in the splits and stuff. It's on the back end. DWTI, NUG, TRIP, GASX, yeah. JNUG, Jesus, 1 month. I guess we could take a look at it 1 month. Okay, sort. All right, what I'm going to look, well, what's the volume look like? I'm running out of time. We'll do that. Okay, I want to get we're good because I think we're getting a change in directions in, say, commodities, and interest rates are beginning to move, and where are we at? Interest rates are going to move. Volatility and equities. We'll take a look at here. Okay, so here's 3 times long on the crude. I have it on a weekly. We're getting a reversal here of a higher high. In theory, on today's pullback, and that you want to kind of look at being a little more favorable on the long side of oil. We'll say that oil hit the bottom here, you know, bounced up to the moving average, basically taking this as like a pause for right now. I don't know how much farther it's going to go. I'd have to break this down into targets on the point and figure chart. But the deal here is that at some point, the people are going to become confused. Is oil going to 60 or is oil going to 20 kind of thing? They're going to kind of like the whole 3 months of the stock market. All right. Where are we at? Here's 20. We're at 25. So that's what, a 25% drop, right? 20% drop. Yeah, 20% drop. Okay, so your risk here is 20%. So you're on the flip side, 20% is 5 is 30. So your target should be 30 here. So I should, if you play this intraday like in a 2-hour chart or whatever, your target is going to be 30 on this. But it's not too clear for me because it's basically you can treat it as a sideways action. All right, NUG. This one looks like a bear flag. I think it's going to come down. I can't. The deal with gold. I mean, we're talking. You know, I turned bullish back here. Okay, we're up to here. It just feels like it's losing its momentum. This red line here, and I just threw these on. This red line is the SAR. Okay, so and I made it into a line instead of the silly dots. So here you can see once it crossed, this was your moving stop. Okay, stop. And it finally got dinged. Okay, so now this is your short and your stop. Here you got dinged for a loss. Okay, so now you're back into long again. All right, because it crossed, it turned. This is your stop. You oops, and you got dinged. Okay, so here we are again. It comes across. Now you need to be short. What I'd be looking for is volatility, okay, like gold. I mean, up 30, what was it, up 30 something bucks or whatever that day, $20, 22. Okay, that was it, right? Okay, so when volatility kicks in, that's usually a change in trend, okay? So NUG, you know, what I would do here is I guess play it on the evens, short at 26, 28, 30, 32 kind of thing. But you're trying to aim for this here because what happens is it'll change the computers from short to long, okay? Because remember, these are weekly, all right? So you're trying to short this one because I just think it's going to go lower for right now. But that may be it for right now. I guess this moving average worked out well too. I crossed here, it dinged it. Usually on the first pullback like this, I usually buy, okay, because it's one of those that it really didn't cross. We have a full reversal here. All right, comes up, and then now you have both of them. It's retesting the line, and you're going to be marking time. Same principle here on this UWTI. This is a weekly. You can see that it's about to cross over the moving averages and the line too. Like I mentioned before, is these hedge funds are moving this stuff. Actually, let me take a quick look at that. I got the crude. Actually, I have it on one of these, right? G is gold. Bar charts. Do I have to log in? Oh no, I can go down to the other one. All right, so here's gold. Okay, yeah, you can see it, right? Okay, so here's gold. All right. You have the large specs, which is your funds and stuff. They bought into it. You're at a record level. You're at a record level now. Your managed money, your hedge funds are beginning to take some off of it here. Gold goes below 1320 or whatever. I'd be looking to sell. Right now, it looks like it's just in a corrective mode to the big picture, but it lost a little bit of momentum on here. I still think gold's just going to roll over. If the economy works out as planned and we get an increase in the dollar interest rates, the stock market digests the fact of, oh, we're raising interest rates because the economy is good. You know, we stop the buybacks, things of that nature. Then the commodities will roll over. It'll be out of favor. You know, it's tough to own something when it's going against you and everyone else is making money somewhere else. So that was gold, but I wanted to look at crude oil. There you go. All right, so here's crude oil. Okay, so what I can do here is take where's my little thing? All right, so the crude oil. All right, you could draw an inverted head and shoulders on here. All right, so it comes to, we're basically at best, crude oil's marking time going sideways. Looks like the happy place is around 47. Swung up and came down below it, found buyers. But you can draw a trend line here. So, all right, here's the oil. We're going to get some sort of pullback on here. Okay, from this morning, right? We're still down. Skosh. All right. But the deal is if you crack over 50 something, you can see them here. Where are we here? Where's the funds? Down here. This blue line, managed money. Okay. So you can see how they were getting out of oil, and then they just rampage back in there. I mean, that's $17 over 3 weeks. All right, they're coming in and bullying this stuff. What did you have? Those are swaps, right? Okay, so they took the other side. Where's the little people? The little people. The little people. Okay, the little people. Oh, they're actually, they figured it out there. God bless them. The little people bought the dip. All right, so they're on the dip thing. Okay, so we have two highs. Now, our angle of ascent, if here you had your 45-degree angle, here it's beginning to pick up a little bit more, 60, 65 degrees. All right, you have to have an alarm through here because what will happen is if it swings, okay, through here, there's going to be a lot of energy in this. These guys have some momentum on here, the managed money. I mean, the way that they're moving just the markets around since February, all of a sudden they're just coming in and they're able to get these trades off, which the deal here is it's basically Russian roulette. I mean, you can see where they took their time and to get into them. You know, it's like they followed the algorithm and then they walked it down, you know, half, but all of a sudden they come storming back. So if they come storming back again, I wouldn't be surprised. I guess there is a gap up here. I wouldn't be surprised if all of a sudden they start hauling out the guys who've been talking about 70 for a while. Okay, for me, I risk it. It's like no more than 60, 65 on this. But remember, then when that's going to happen is even if we are in a sideways range and stick our head up, we'll probably come back through the other end because they'll turn on the spigots again. Because they can get rid of this stuff. They sell you here you go, take delivery. That's where those swap guys are coming in down there. Your producers are short. They're willing to short any spike. Right? Yeah, they're short. Yeah, it took them forever. See, here's the other one too, is they took them forever to actually get short. So here's the shortest that they've been in. What do we have? November. I mean, we're talking almost 2 years. They finally get it right, and they get it right here. So after marching it from 109 down to 35, they go, "Hey, we're hedged." Well, okay, guess what? This gets interesting here, right? So the boys come and girls, they come in and they bully the market one more time, whatever reason. A tsunami in the Straits of Malacca or some fuck. Is that the sun? Cool. All right. It won't take much because we're already up there. I said play the odds 59, 51, 53 kind of thing, or 49, 51, 53. It won't take much to swing it. Couple of bucks. You know, boom, boom, boom. We saw what happened in gold. All of a sudden now what we do is we catch the producers on the wrong side. Now, we saw with what happened with Chesapeake when things don't work out from the top level there. When it comes down to speculating instead of hedging, is that these guys are short. They're going to produce stuff. Now, what it is they may get their money, the stuff has to come out of the ground. But the deal is all of a sudden their hedge is just running against them. They have to go marching back into the bank and go, oh yeah, we need more money to hold on to our position. While we're waiting for the shit to come out of the ground. You know, they've may have hedged forward. I haven't looked at the charts to see how far forward they are. But all of a sudden, what it is everything is working out on paper. They're hedged. They have their price. The market's taken off, and they have to cough up. They have to go. So we're basically going to move money from the banks through the capital markets here and into the future for whatever short covering rally. And we've seen some nasty ones in equities lately. I got pinched on one of them. I forgot to look at short-term or short interest. Oopsie. I'm better now. I have a new calculator. All right, so, and the deal here is it may be quick. All right, so it's one of these things that in a 1 week period, you see oil, you know, whatever, $4, $5, $6 and then reverse. Because these guys actually either had to pull the cord on their hedges or whatever. That's what it feels like from a guy that was in the pit type of deal, where it just feels like it, the way that they can turn on a dime and move this thing $17. What is that, like 25%? Okay, in a matter of weeks. Okay, bam, bam, bam. All right, take $17 again from 43. That's 60. We filled the gap. We whack on here. You know how much? I mean, if these guys, the producers, or where are they down here? The producers finally got their crap together. They're short. I mean, could you imagine you're short at 40, and now you're getting burned all the way up at 60? Well, what are you going to hedge? Your forward stuff, which they will. So we'll see a lot of back end supply, and then they'll just be pump. I mean, that's where I think it just drags on. You know, I don't expect us to go back up into that area. I expect all that party to be happening over natural gas. The Justice Department came out today and spanked our little bloodsuckers. What was it? 4 years, 5 years after the peak in the metals. Goldman Sachs. They had an aluminum warehouse, and all they did was they'd drive the aluminum around the block and say that they make deliveries and stuff. Oh, that would be the same guys that say, I was out looking for bullets and silver and there was none on the shelves, you know, but I was able to find some, but I don't need as much. If you pay 40% more than I paid, here's a whole brick of 410 rounds. All right, so that's that. Now let me go back. What else is moving up in here? Let's go. I want to go back to that gold. All right. Take a look here. All right. So this is pretty much balanced out. Okay. Because when they, like we saw before, when they pull the plug on these here, it's going to be, and for whatever reason, we're talking like the interest rates, the cost to carry, storage, and all. It's just on paper. I still say the banks sell the same thing over and over and over again. And how many people take delivery, right? It's like a run on a bank. Okay, so NUG, you want to short this thing. I got to believe it's going to come down to 8 to 10. And this is, remember, these are miners, so they'll go belly up. They all do. Here's dust. So it's same principle. It's going to swing higher with the other one. It just looks that way. That's making a bear flag or a bull flag. You have lower volume on the pullback. Okay, this is a good reversal bar here. It basically cleaned out everybody that got caught here. But I'd go into say dust. This one, I posted a chart yesterday, long UGAS versus DGAS. What I want to see there is when they stop, one stops running and the other one stops falling is what I'm looking for here. It's not that I'm picking a top of natural gas, but it's one of these things that we're at September. Seasonally, natural gas, I think, peaks in October. Oh, where's my book? Oh, you get a thing on natural gas. Oh, hey, it's the first of the month, isn't it? Commodity cycles. What do we have? September. Corn, eggs, and beans. Well, definitely. What Won't be playing too many eggs in beans at the end of the month. Okay, so it's harvest. All right, so DGAS. It's one of those where anything at $4 and stuff, then and depending upon where we're at, maybe it for the early part until later on in the heating season, because basically that pullback, I believe they're just filling up the tanks. Gold miners, the same thing. Let's short that one. The bears, this is the little one. This is a little more of a pullback. I haven't looked at these individually, but I have to believe that these will fall apart more than the others. Just take this as a double bottom. TZA, okay. Oh yeah, first of the month. Duh. Okay. This is, you have like TZA goes along with TNA 3 times. This is all Russell 200, okay? And you're back to the whole bias thing again, okay? This is a downside in oil. Where are we at in oil? It'll be a little bit, I think, because I still, even though we're getting a pullback in oil here, I really think we're going to go press the upper side here, just due to the fact of how the funds are bullying the stuff around. Here's the energy bull on the equity set. You can already see that they've broken out. Okay, so the equity side of things are already moving on the energy side, and they throw this one into it. What happens if oil does go to $60? Well, all of a sudden the Fed can go back and say, you know, that's going to be passed on through the economy, and that's inflation. We're going to have to up it twice. It doesn't make any difference. It's whatever the people believe. I mean, gold trades all around the planet, just like people's currencies. If the euro is up and gold is down, and it's going to be opposite for America, right? I mean, it doesn't make any difference. It's whatever the people want to believe. Cognitive dissonance, what you believe. All right, so what's this one here? UGAS. Okay, so that one's a positive structure on here. I mentioned Goldman Sachs. I'd rather watch the futures just due to the fact of we're in a seasonally volatile period. I'll go more into that later. Because if you do get anything on natural gas, you know, we're basically stuck, you know, in the lower, the bottom 10% off a price or so, or is that about right? 186. Yeah. 16, yeah, lower 10%, 10-15%. So we're still there, and you can still accumulate. And if they throw them out at you, you go further out. You know, 2018, 2019, you can do that. Then you put it on and you just walk away. Okay, here's that TNA again. This is the bottom here. It's one of these things that this might be a cross and a rollover, but I'm looking for something. You want to own these stocks on any pullback. I liked it, of course, when it got down to here, but of course it's working itself back up there. But here's 99 and we're at 82. So we need to pull something out of the hat. But on the big picture thing is, if we do roll over, here's the high. This could be the first leg down. This is the ABC pullback. And then also you start a heavier wave down. Some of these came out after 2011 and that kind of thing, some of these bullish ones. So we don't know what the bottom is, just like with XIV. Biotech bear, I'm not interested in it. It would have to, fear it'd be the long side, something over 22. Well, I guess if it moves 10% higher, take it kind of thing. Well, I guess stocks go down in general. Here's the bear making new lows. This should be our new TVIX kind of thing. FAS. Okay, this is the bull one. Basically, it looks like a pause here, right? What are these? These are weeklies. Okay, so we're having a pause on here. Higher interest rates will help out the financials. They get to charge more. And macroeconomics, when interest rates go higher, banks make more loans available, right? If you can sell, if you can sell something for $100, you sell as much as you can. If it's at $10, you don't want to sell as much. Chinese bull, the old saucer. for right now. I'm not interested in it. We're getting a play here on, these are defensive in nature. I can't see it working its way back up to the highs. I'm looking for something to start off on some of these here. Like emerging markets, that one may be an island bottom. Is that a bullish? It's a bearish. Okay, so that we might have an island there. Okay, so buy. So the EDZ, I might want to buy that one. I better save that one. Okay. TMV, this is interest rates one. I talked about this a long time on writing options and getting into it, on and on and on. This is a 20-year though, so it's not really the front end. The front end is really, I found a couple of them, but they're not liquid for obvious reasons. Interest rates, as we saw in that one chart with the 1 month T-bills flat for years. So who'd want, like, imagine this one going on for 8 years. There'd be no volume in there too. But I like it. You can buy it, write options, buy it, right, as long as interest rates flow into the back end of rates, like I said, 20 years, you know, buy right, buy right, buy right, buy right, buy right. I mean, if you can, you know, you buy at 17, sell an 18 call or what, try for $1, you know, and all of a sudden you're beginning to make, you know, 6 to 8% per cycle, you know, that kind of thing. You have both the option premium and the capital gains on the stock. You can always buy more, you know, 1790 and then sell another call, sell another call, sell another. I mean, you're good to go. This is a decent pattern here outside. Plus we saw with Brexit, this is Brexit with the bottom. This is what's moving on. And I think we're going to go higher here. Here's the silver deal. Like I said, long commodities back here. We've gone this far. I'm not interested. How about that for a pattern? That's not a very good looking bar, weekly bar here. That's no bueno. All right. I'm not interested. This would be like the short side here of instead of playing the long way, if you want to play the short way on this one, and it has options. Here's your bull. It's going to have to work that one in an intraday. I'd rather trade the futures. Here's the bull. That one paused on the pivot, reversed on there. That could be one of, what do they call it, a shooting star. But we're going to know more here over the next couple of weeks, because as volatility has been narrowing, it'll be easy for the breakout. It's kind of like the spread on something. You're going to get movement out of there. Okay, what is this? Oil and gas production, blah, 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 bear. That one will probably go reverse split. Okay, and oil on this one. Okay, so this is interesting here. Here's the Russia bear. All right, so we need to watch on that one if that's an island reversal too. Okay, Kating, gush. Soxel, that one looks like a reversal here. All right. I need SOX S. Okay, so semiconductors, chips and stuff. All right, kind of look on the negative side on here. I kind of like the long end on this one here. $5. $5 on a $17 stock, 20-30%. And you could get that in 4 or 5 weeks. Yeah, there you guys go. There's your winner right there. We'll take that one. I'll have to watch those. Intraday, weekly, well, Kevin, be a good boy. You're running out of time. All right, what do we got? 1 minute. All right, 2 hour. All right. Oh, how about, what do you need? You just need a couple of months. I don't know, you got to keep that, right? All right, here we go. Okay. All right. Okay, so this is semiconductor bear. Okay. I like this one as a swing. Okay. The little red line is is your stop and reverse. I would favor, well, you could go a couple of different ways on this. Options says no, double check. Somehow get into the, you need to be in here at 1780 on the flip side. What do we got now? Probably not trading. Come on, give me a price. Be such a goof. SOXL, right? SX, good boy. 60 and 80, so we're already above it. Oh no, 80 is the upper end. Yeah, so you want to own it, and then I pressed for at least 21 on here and up to 22 and a half. 22 and a half is what I shoot for. So that looks like your winner here. This is a 2 hour, how do I save that? I'll just save it for now. Okay, I think this is coming around. I'm going to guess up to there. And what's your stop on here? We're talking 80 cents, so that's not too bad. Okay, that looks pretty good. Okay, on any pullback, yeah, you wanna accumulate. I would, yeah, anything over 17, I'd buy from 17 to 17 and a half if you can get it. But this is a newer high. One more high, it'll probably swing up to 8. You'll probably get a buck on it here. So you get a buck on it once it goes through 1780. It's good for a buck. We'll probably do some tree shaking this morning, but I kind of like this one here. What is that? That's good. Buck, $1 to $5. That works. And then I think that's that. What I'll do here is I went through everything. I need to get my stuff together. I've had a lot of dings this morning. I need to copy. I want to actually, while I have you guys still on here. All right. Have that. What do I? Okay, that's on that page. Edit list. Oh, you buggers. I'm gonna make life easy for me. Okay, what I want to do is I think some of these are earnings from today, and I just wanted to look at them real quick. I have them all grouped over value, grouped as in a week to scan real quick. But to break it down per day, I'd have to type in everything. So I have to enter these in manually for your patience. All right. Okay. 10 per page. Go for it. Let's see some charts. Not that one. Not that one. Oh, is that a chart? Oh. Uh-oh. Okay. ADXS. That one looks like a, what do we got here? This one, is that one up yet? ADXS. Are you running yet? Come on. Here, bugger. All right. All right. It's kind of thin. Big picture thing basically looks like a pullback. At best, it's a sideways, but you can also do a larger inverted head and shoulders. In my eyes, I'll pass. I would lean that it would, there's a gap here though. The smaller, but these are volume bars, so a lot of volume went into it. Not a lot of volume has come out of it. So it is susceptible to filling the gap and trying to clean people out. But we're getting a series of higher, even though this is a little deeper than I thought, we're getting a series of higher lows. And so it might hold here. Okay. But I'm not a huge fan. That one's already doing its thing. Not interested. That one has a swing, but the bars are thinning out here, so you're running out of takers, especially into these wicks. This one, Brady Corp, BRC, that one has rollover written all over it. BRC 33, 37, a little bit wide. All right, it marched on, marched on, marched on, marched on. Here's the pivot for the rest of September right here. Since I'm leaning on the bearish side, any type of bounce on here, I'd look for it to short. This one would go from about 33 to 35, so that's about 10%. But if you catch something, it may go further. It's one of these that a lot of time has passed. Here's your pause. It breaks out, not as much volume as like here, you know, and now we get a fat bar. So it cleaned out a lot of people. What was that one that I pointed out? Smith & Wesson, basically the same thing. Came through earnings, swiped the low, went back, swiped the high, and then came back through. So it's basically the same thing. When the violence hits, you know, you go from one low to the high and back through. That's usually a trend change. This one I could see going down to 27. So $6 on a $30 stock. So 25%. Even though I looked at it now, it's just a 10% deal. I'm gonna move this over to like halves and dollars. You know, going for 50 cents and leave. Going for, say, on 1,000 shares. All right, that's me again. How am I doing there? We're down. We're just cratering here. All right. This one looks like well, it's a dollar stock. I'll pass. EROS. This one, entertainment, it said, or something, right? It's kind of like it's quiet under the radar. You know, you have all huge bars, people getting out of it. Shifting hands, that's base building. Things narrowed, broke on out. In my eyes, it's too late to get on board, but it would be worth a look-see to see if it comes back into, if it loses 20, 25, to see if there's something there. Because you can see how everybody got into it, but it's below the radar. I mean, it's basically, it's being painted here. It's going higher on little bits. It sure as hell came down on big chunks. But it's one of these things that if it comes back to 12 and all of a sudden it goes back over 20, you're going to get people to start pointing at 35. So, you know, that's how I kind of look at it, because of if we do get a hard shake, you best be having your list out of things to own going into this. And it's mostly technology. What do we get with a stronger dollar? Imports, all shipping, yeah, consumption-wise. HOV, that one looks like a pause here. Hovanian, right? Yeah, okay, so this is home builders. This was like back to your materials and stuff. That one looks like any type of pullback, it's a buy in that sector because we're in that swing. This one's interesting. How much are you? 40 cents? No. IKGH. Jesus, do I want to throw IKGH? See, the thing is the company doesn't have to be. You already got it. All right. See how a nice bar come back through, take out the lows. They accumulated some more and a pause down here. So this one has a swing to go higher. But it's only worth 40 cents right now, Kev. But that's the look of it. See, even if I took off the numbers, I took off the name, I would say that it would swing up to here. And in this case, what is that? 40%? 40, 50%? 55? Yeah. But you're talking about, what's this? 600,000 of a 40-cent stock. What is that, 25 grand? All right. KR. All right. We have a Kroger's here. All right. Looks like a pause here for Kroger. People were buying it. All right, Kroger. I have that. So what do we have? Brooks and Mortar, 30 bucks. I would be, you know what I would do is I would, what are the options? What's today, Friday? Okay, so where are these options? Next week, $30. Do I want to buy this thing at 30 bucks? What's that, 29.5? And then options are at 40. All right, it's one of these things. Okay, follow me on this one. All right. If you, next week option, okay, if it opens down in here, a 30 put is 40, 50 cents right now, okay? If you can get 50 cents or better, I wouldn't mind owning it at 29. I was tempted, you know, you're tempted to buy it here, but if I get it down here, I'm going to get all these people. You can see the 2 heavy volume bars. People got out of it there. And you can see that, you know, obviously there's problems going off here. Or remember that these guys have real estate and stuff too. But I guess, you know, if you guys want to hold longer than, what is this? What is that, 1 month to 2 months? 1, 2, 3, 3 months to make. Because I would assume it would come back on through to 33. So what is that? 10%. Buy it or sell the option at I need to look at this is a daily, weekly. Yeah, see, now it drops down to 27. Okay. And that's a huge hedge in shoulders. All right, so 27. So this is on a weekly here. So you're back down to the same. So it's kind of like an accumulation thing. 33, 34 is there. These are the targets. There's the moving average. Kroger. Well, okay, put Kroger. This one I'd put on my shopping list. All right, why? I don't know. I don't have yield and options. People have to eat, and they also have real estate. Okay. I'll have to check it out. But yeah, it would be one of those that, because, I mean, you were just at 42 at 27. It's one of those things. I don't think it's it's a super value or whatever, you know, but it's one of those that it's beginning to look, you're coming into an area. I look at it as the dollar, you know, buy some at, you know, what did they say? 30, 29, 28, 27, that kind of thing. For some of you that follow it, Kroger, that one looks like a bear flag and a $7 stock. Not interested. You can see the huge volume here, but then it didn't go anywhere. That one looks like it's Mattress Firm Holding Corp. It's already, okay, skip that. Optical Cable Corp. That one has some, this one's beginning to group up here too. OCC. Oh, where are you at? OCC. Optical. But everybody's going wireless, Kev. This is why I hate stocks. Having a clue. Yeah, this one's jamming up. This one's good for nickels here to play with. I don't know what the short interest is. OPTT, that one sounds familiar. Good Lord, look at these volume bars. They definitely have this earnings thing written out all over this guy, don't they? All right. Okay. So that's kind of flagging out too. What is that, 50 cents? 75 cents? All right. Okay. These are earnings days. These are just the amount of volume. Crazy insane. All right, so this thing gets bullied around enough. This is on a daily? Good Lord. All right. You're on your own. But yeah, this one I definitely have to watch. Put that one on my radar. What's the setup here? This one, 8 1/4. And it's at $9. Yeah, this one here is going to be interesting here. OPTT. I'll lean towards the bullish side on that one. RFIL. That one's a $2 stock. That one looks like it could go 30, 40 cents higher for those of you that do that. I'm not interested. Energy navigation. That's structurally, it's trying to set something up here, bottoming out. And super value. You know what? Maybe we get a merger with these guys. So I'm going to leave it at that for now. I have to go do my thing, and you guys go do your thing and check for messages, no messages. And there you have it. I'm going to let you go, and I will forward Another link if I have something else going on. And I believe I recorded this if I have all my buttons pressed. Don't press my buttons. So I thank everyone for stopping by, and I'll see you in the chat rooms and that today. Take care. I don't know. Have a great weekend.